As I pointed out with the second quarter numbers. Rima standing by now to decode them for us. Rima.
Well, it's a good set of numbers in Q2. The company has delivered a revenue growth of 2.2% in constant currency terms, ahead of consensus expectations of 1.8%. And this marks the second consecutive quarter of strong growth. It was 2.6% in Q1. They followed it up with a 2.2% revenue growth, which basically means in the first half of the year, the company has grown pretty well. Margins, though, have expanded by 20 basis points. So 20.8 has become 21%, but slightly lower than expectations. And also some of the other peers, aided by the rupee depreciation, managed to expand their margins more than Infosys. So while the revenue growth has been strong, perhaps there is a little bit of a miss on the margins. Now on to the full year guidance. FY26, earlier the revenue guidance stood at 1 to 3%. But considering the strong showing in Q1 and Q2, the company is confident at least to raise the lower end of the guidance. So now the new revenue guidance stands at 2 to 3%. But rough calculation would suggest that, after this performance in Q1 in the first half of the year, maybe, why has the company not raised the upper end of the guidance? I mean, is it because they're just being conservative and they want to see the situation play out? So, that's a little bit puzzling that after this Q2 performance, maybe there was some scope to raise even the upper end of the guidance. Margin guidance on expected lines remains unchanged at 20 to 22%. And for the first half of the year, the company's margins are bang in the middle of the guidance. There's one internal which is actually fairly positive, and that is actually two of them. One is deal wins. So deal wins continue to remain healthy. In Q2, it was strong in Q1. But the second one is attrition. Is the total headcount addition. Remember, the increase in headcount is also in a way seen as a leading indicator of demand. It's only when you have demand visibility will you go ahead and hire. And IT companies went through a lean patch where headcount addition was very modest. Some attributed it to the AI productivity-led benefits. That's the reason why they didn't hire so much, or because of the overhiring that happened in the post-COVID boom. But in the current quarter, Infy's headcount has gone up by 8,200 employees. And I think that as a signal is fairly encouraging. Sandeep Agrawal, fund manager at Sovilo Investment Managers, now joins in. Sandeep, give us your thoughts.
Hi, good evening, and thanks for having me on the show. So I think, obviously the numbers are slightly better than estimate, and also they have adjusted that better than expected number by upgrading the lower end of the guidance. So definitely, slightly better than what was expected, and margin guidance have also been maintained, and TCV is also good. But the only point which I would like to highlight is still, the growth is 2 to 3%, and even if they achieve the upper end of guidance, it will be 3%. So the challenge, I think, is a mature industry, and they can do only this much, and they have done very good in this current environment where, efforts are going down due to AI. So I am not seeing this as a negative number, but again, nothing great to read about on the positive side also.
Okay, so beating modest expectation, and it's not that growth is gung-ho. Point well taken, Sandeep. Thank you for joining in. In fact, as you can see, Salil Parekh has started the press conference.
10% was new or net new work. In addition, we announced a mega deal worth $1.6 billion after the close of the quarter, but before our results announcement. We've added 8,000 employees during the quarter. Our client interactions are showing a strong focus on deploying AI across the enterprise, both for growth and for cost efficiency programs. In doing this, we are continuing to scale our team of forward deployed engineers. With a strong performance in Q2, we change our revenue growth guidance for the financial year. The new guidance is growth between 2% and 3% in constant currency terms for the full year. And our operating margin guidance remains the same as in the past quarter at 20 to 22% for the full year. With that, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sanghrajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV18.
Thank you. Hi, Salil. Hi, Jayesh. Salil, firstly on the guidance, the fact that you've tightened it but not really increased it from 1 to 3 to you've gone to 2 to 3%. And, with a 2 2.2% growth this quarter as well. At the current run rate, you'll at most have a flat growth for the rest of the year for Q3 and Q4 with the current guidance. You'll easily get to the top end. So I wanted to understand, are you not seeing a meaningful recovery, especially when it comes to your manufacturing, retail, these kind of verticals? What kind of headwinds do you continue to see? Because for Infosys, the contribution to revenues is slightly larger than peers. That was one. Also on the H-1B visa issue, if you could give us some details on how many employees you deployed on this visa for this year and the previous maybe a couple of years, and whether you see now this as being something unviable, sending freshers on H-1B visas, to work in the US. If I may also ask, your peers like HCL Tech have also started to quantify their AI revenues. We've been asking you this for several quarters now, and we understand AI cuts across services and sectors. Could you give us a sense of, what exactly you're seeing there? And finally, the Versant Group acquisition. What exactly was the contribution to revenues, and whether you're looking at further M&A in the region or outside? Thank you.
So let me start, and Jayesh will add in a couple of things. First, on the guidance and the environment. So in the guidance, typically we have the second half of the year is slower than the first half. That's the normal pattern. So we've continued with that pattern. Having said that, we've seen good traction, and that's how we've actually increased the guidance. The previous guidance was 1 to 3, and now it's 2 to 3. So in a sense, we have much more confidence with the lower end being increased in what we see into the outlook for the year. In terms of the specific industries you mentioned, we had a good performance on manufacturing, on financial services. We still see constraints in retail. We do see a good pipeline there, and we will see how that plays out in the coming quarters. Keeping all those things in mind and the global environment in terms of the macro, we decided to keep the guidance at 2 to 3 with all of those factors that I mentioned. On the H visa, what we've shared in the past, what we've shared recently, first, our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities. We have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future. We don't have any specific information to share on the numbers that you had suggested.
When you say a minority was dependent on the H-1B visa, could you give us, in percentage terms, how many of your employees that you were sending abroad were on these visas? And when you say there won't be any disruption, how exactly will that play out?
So there, we don't share the specific numbers, but the majority of our employees in the US are employees who don't require any Infosys immigration support. The way we are working with our clients, we've reached out to each of them and made sure that we see and they see how their delivery continuity becomes on track and remains the way it is right now. Then on Versant, so first, there's nothing in the this quarter. They're going through all the approvals and so on. So the regulatory approval, which is a normal process. We'd anticipated it would come sometime in the coming months. Yes, we are very much looking at other acquisitions. We have a good pipeline. We don't know when those will materialize, but there are some opportunities there which we're looking at.
Sorry, the question on Versant was, going forward, what kind of contribution to revenue do you expect? And in M&A, what are the areas, what are the geographies where you're looking to fill the gaps?
On the contribution, we don't have anything to share now. When it closes, we will be in a position to give that information. Is there anything more on Versant?
I think we have given the last year's numbers of Versant already in the stock exchange filings, that we did last time when we announced that. So you can make an estimate based on that. But just to add to what Salil was saying on the guidance as well, if you look at the commentary last time when we gave a guidance, we very clearly said that the upper end of the guidance is where we are expecting stability in the environment, and the lower end of the guidance is where we are expecting worsening in the environment, right? As we stand today, the environment still remains uncertain, and despite that, on the back of Q2 performance, we have tightened our guidance, where again we are very clearly saying that at the lower end we expect the worsening of the environment, and the upper end we are expecting stability in the environment, right?
On AI, I think we are scaling up massively on AI. We have a large team of FDEs. We are doing a lot of projects on enterprise AI with clients, on growth, which is focused like in the sales function or marketing function, on cost, which is focused on many of their processes, optimizing them, on customer service, on code development. So there's a broad set of AI work that we are doing with our clients. There's a large number of clients for which Infosys is today the AI partner of choice. So we're going quite well. We have strong partnerships with a lot of different large tech companies. We believe there's a huge amount of opportunity in the enterprise AI space. And with our experience on how to navigate within the enterprise landscape, we are quite well positioned to help with that.
Thank you. The next question is from Jude from ET Now.
Hi, Salil. Good to meet you here, and congratulations on that performance. You spoke about scaling up on the AI front. Could I get you to throw some light on what those specific deals are like? What is the AI order book shaping up to be at this point in time? And more importantly, what will your hiring trends be like for the rest of FY26? And I know for a fact that you have the confidence, which is why you've raised the lower end of the guidance. But what is the overall demand environment shaping up to be like for the fiscal?
So on AI, I think what we see today is a lot of interest where there's deep work going on, whether it's on a specific knowledge process, or it's in credit risk, or there's work doing on software development, or there's work going on customer service. So broad area of AI projects that we are working on. In some cases, we're working across an enterprise on transforming that enterprise from an AI perspective and making them the leading enterprise in their industry in AI. So good traction there. In fact, we have more and more of this that we want to start to share in the sense of what are the approach that we are taking, how it's working, and you'll see that as we go through in the next few months. On the environment, as Jayesh was sharing, the environment is still uncertain. And what we see today is some changes in where the global environment macro is looking. We still see in some of our large markets that there is growth, but there's also some inflation, there's job creation, which is constrained. In some other markets, there are cost constraints. Some industries are seeing that. So that's a mix. Equally, we are seeing a lot of strength, for example, in financial services. Our client base is doing very well. We see extremely good growth. We've seen good growth in manufacturing in this quarter. We have a portfolio where we are across all of these different industries, which helps us to deliver the kind of performance that we've delivered for this quarter. On terms of hiring,
So if you look at our hiring for this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Well, that is Infosys there. Salil Parekh taking us through the results for the company. Strong performance coming in there for Infosys for the second consecutive quarter. More importantly, telling our colleague Ritu Singh there that the H-1B issue should not be disruptive for Infosys. While not giving a specific number, that the US workforce for Infosys on an H-1B visa is quote-unquote in a minority. We will, of course, decode more and keep you posted on all the other earnings of the day and the top stories. But for now, it's a wrap on this edition of Business 360. Stay tuned. Lots more coming up.